All right, good afternoon, traders. This is Christian from Hertz Tribeca Trade Group, and it is Wednesday, April 8th. We've got one more trading day of the week. Friday is a market holiday, and kind of makes you think a little bit going into tomorrow what kind of day that we're going to get for a 3-day weekend. But let's start with today. Of course, first of all, everything that we're going through is for information purposes only, not giving out any recommendations or advice or anything like that. So, what was the theme of the day? Equities rally right back on strong breath. Pretty amazing, right? Considering what happened yesterday in equities, right? We basically, gapped up into the open, which again, what I said in yesterday's video, which I'll reference a couple times, was that I thought it was a pretty stupid move in the morning. And then, of course, profit takers came in throughout the day yesterday and kind of pushed us to the lows. And depending on what indice you were looking at yesterday, some closed in the red, some were able to kind of hold on to the gains just a little bit. But you would think when you saw something like this, right? And this was my take at the end of the day yesterday, was that maybe we would see some more volatility over or in the overnight session, and we did not get that. So, it is. I'll say this again because I've said this a few times. It is very difficult to figure out what we're going to do on a day-to-day basis, like to make predictions. I've been very adamant about not making predictions right now in this market. It is just too difficult, right? And I think anybody that really does, right, continuously puts out recommendations. Nobody knows, right? I mean, we try to like basically go with what we're seeing on the tape, go with a little bit of market feel, some instincts, and then really just try not to. For me, it's been trying not to be positioned way too much, right? To be somewhat market neutral. I mean, I even bought a little bit of IWM puts at the close yesterday. So, the and I still had a really nice day today. So it's really like, making sure that you're not doing any crazy positioning, because it is very difficult to figure out on a day-to-day basis what is going to happen. And I thought at very least that VPOC down there at 26.19 would be taken out. So where does that leave us now? Now that we did basically close on where we were at the highs of yesterday, where does that leave us from a technical aspect? And we'll talk about some of more of today's movers. But I wanted to cover this in the S&P charts first. Going into a 3-day weekend, if we kind of look at this, first thing I'm going to show is, well, first of all, this is the 5-minute chart. Again, that VPOC is still down there on the downside, but we're not close to it, so we don't have to worry about it right now. But we did return to these highs, right? And if we zoom out a little bit, there's nothing majorly going on here in terms of another resistance level on the 5-minute, but you'll start to see things as we zoom out. And if we go over the 1 hour, you're going to see some things kind of come into picture here, right? So we've got this VPOC, virgin point of control. So again, like a big volume area, right, that hasn't been retouched yet. So the next one is going to be right in front of us, right? That's right at 27, right around 27.72. Sorry, 27. It's labeled there, 27.68. It's beautiful that our indicator does that. So that's one thing that I would be cognizant of. And then if we go a little bit further out, right, we also, as I mentioned in yesterday's video, we tagged this top of value for April. We did it again today, and we closed above it. So we do have a lot of other things, nice things going on here. We've got a nice MACD crossover. I'm sorry, not an MACD crossover, a moving average crossover, the 20s crossing over the 5. So we're going to need some power, I think, to get us through this. It's not to say that it can't get done, but the way that I look at this, right, and we'll go to the weekly as well, because I think this is notable too. This is something that we talked about a couple weeks ago. Somebody threw out an S&P level that they said, hey, we could possibly bounce to this, and I forget who said it, but I said, oh, that actually coincides with what we have on the weekly chart, which is bottom of the 2020 value area. So I think this is pretty decent resistance. So how am I going to use this, right, in my trading? I would be very nimble around here. I do not want to have big position sizes. I've been talking about how I've been, positioning in my trading account, which is basically pretty thin, and really not getting caught by the overnight moves, because I do think, again, and looking at these moves that we're getting, this is very different than what we typically see, right? Typically, what we see in the market is the overnight moves are where the alpha is, not during the day, right? So I know that I'll say that again because I know that's foreign to some people, but in traditional markets, the overnight moves are where you make your money. The now you could still make money in during the regular session, but the market just moves more overnight, right? And that's something I've talked about. I always give Sentiment Trader the credit for this on Twitter, because Sentiment Trader tweets this out probably once every 3 or 4 months. But right now, what we have is a little bit different. And there was somebody that I retweeted this weekend too who was pointing it out, that right now the market moves during the day are bigger than normal, right? And I apologize for not having this tweet up, but you could go through my Twitter feed. I retweeted this on Sunday, I believe. So you could go and you can find that. But so that's why, like, you don't have to really try to figure this out, like what's going to happen, going into the following day. And I think right now, having less positions on, which again is basically what I've been doing all along, because I didn't think that we would get to this that quickly, 2774. So again, it doesn't, like, for me, it doesn't necessarily have to mean like, oh, like I have to stop trading and not putting on any more longs. It just means, hey, we're hitting some major resistance, and I really don't want to force things. I can continue to day trade and so forth, but a lot of major moves have happened before. Now remember, this was as we were falling too. I thought we would hold support here, and we didn't, and we sliced through this like a hot knife through butter. So maybe we can recoup it, and I think that's why you have to be kind of open to it, and not just say, hey, even though I see resistance on the 1 hour, the daily, and the weekly, it is possible that we could get through it. But I think for me, remember, I always think about things in terms of trading, in terms of probabilities, and where the better risk to return is, right? So again, probabilities. And I think with this right in our face, 2774, I would rather let this play out a little bit. But again, it's as I said in the beginning of the video, it's very difficult to predict. But I would rather be a little bit more defensive here. So that's my thought for the overall market. We'll talk about some things, and again, that's the overall market, right? Mostly what I'm trading is individual stocks, but it's important to realize where the overall market is. Nasdaq is going to have a different picture, right? So if we go to Nasdaq, right, Nasdaq is above value. So again, if you're trading more tech and more Nasdaq stocks, you've got a level of support. Because barring anything crazy for tomorrow, which I'm not expecting, I always give you my thought whether it's wrong or if it's right. Yesterday it was wrong. I have no problem admitting I'm wrong. It's not about whether you're right or wrong. It's whether you can make money, right? So I have no problem admitting from time to time that I'm wrong. But I recover from that, and I don't stay anchored to any opinions. That's how it's able to work for me. Is like, whatever, oh geez, I was wrong about that. Okay, no problem. So barring any major sell-off tomorrow, 195.38, and I do think for tomorrow, it's could be like replicate what we normally see on a Friday, which has been pretty difficult to trade, because a lot of traders just don't want to carry a lot of risk into a 3-day weekend. Even the regular 2-day weekends have been tough. All right, that's that. And my goodness, what a move in the small caps today. So if we go to IWM, this candle should look pretty nice. Again, I mean, it could still retrace some levels. It did finish up. It didn't close on the highs today. It was up around over 5% for the day. And also the mid caps were really strong. MDY, which looks similar picture on the weekly chart. So I don't really know where these things go. because they're so far. Well, I guess 296.32 would be a good level for the mid caps. I don't think anybody really trades the mid caps. They're more of a level to watch. And also, IWM is coming into that top of value resistance as well. So we'll see how it behaves here. I think that a lot of people I think have questions about, hey, how is the market rallying like this when so many things are closed, and the country is not even reopened completely. Well, you just have to remember how it works, right, with the market, and it's always pricing. It's the price is a leading indicator, right? So it's always pricing in future things. And I think that's what we have here, right? The market fell probably a little bit too far to the downside, right? And now what you see is a rally that's also, could have a chance to be rallying a little bit too far. But remember how far we fell, and how quickly. So it is like I use the analogy sometimes like a rubber band, right? When you stretch the rubber band so far, it does snap back a little bit. So this is a pretty nice move that we've had this week. So again, I'll say things like, don't be greedy, and watch your risk in here. I would assume that some people are probably, like we saw yesterday, probably taking profits. Again, I'm still amazed at the price action that we saw yesterday and the recovery today. But I'll tell you, this is the best show right now that's going on at home is trading. It's action packed. There's something different every day going on today. They're talking about making progress on OPEC, and that kind of gave me a little bit of trade in the XOP ETF. Not something that I trade that much, but something that's gotten this beaten up. It was up 9%. I think when I bought it, it just broke out of value, which was right here. So this was a nice move that I caught. This was when like USO got halted. By the way, like USO, if you're tracking USO, that's fine that you can do that, but USO is not oil. Oil, you have to pay attention to oil futures. USO is a basket of oil futures, right? So it has the same laws that if it's up so much, there's volatility halts and so forth, but this does a really poor job at tracking oil. You could still trade it, it's fine, but there's major slippage, right? You could see oil is up 11%. USO is only up 5%. That should tell you something. It's a horrible product. But it is what it is. It's easier to trade if you don't want to trade futures. You can certainly, try to trade a little bit of USO, but it's like the same thing with VXX and VIX. It's a horrible product, the VXX. All right, so I'll move on from that. I wanted to talk about some of the trades that we did. I went over a lot of charts last night. I thought that was a little bit difficult because a lot of them look the same. But hey, here's some of the names that we found that was on the watch list this morning. I traded Ring. Again, this is how I use value areas, and sometimes price can jump right through the value area. But this is the 5 minute on this, and I just was looking for like a cute little trade here. And I picked this right on the bottom of the day, and I sold it right at the bottom of that. I said my target again. I plan out all my trades in terms of where I'm, talking about. As soon as I get into a trade, I know where my stop's going to be. I know where my targets are, and I thought, an $8 move was good enough. The damn thing finished up 11% on the day, so that was really nice to get. But of course, you could always, right? You could always leave the last portion of the trade. I was just very content. I was like, hey, I got 208 in like a matter of like an hour. So I was like, oh, I'm out. And then I looked an hour later. I'm like, woof. Another one that worked really well was Chewy. Chewy had a phenomenal day, up 10%. I've been looking at this Chewy now since they reported earnings, right? They kind of settled back in here. Really, really nice setup. It just took a couple days, right? I tweeted about this weekend. It was on the member weekend watch list. Didn't go anywhere here, but notice how well the value area helped for this. You did not get a close inside value, so it held that support beautifully. So really, really nice to see that hold value and give you a nice signal. And then it basically went today. And what the signal was on Let me just turn that off. What the signal was a move into value, right? And it failed in the beginning of the week on Monday, but the second time was the charm. All right, and then Zscaler, I was able to hit a target in Zscaler today. This was another setup that I've been watching. It's been digesting this move pretty nicely, and I'm still holding some of this. You've got a couple levels. There's 71. I think there's a near level that we've got on this thing. Well, it's not here. Oh, I think I got the wrong. I need the 180 time frame. Let's see. I thought I saw another. Oh, there we go. Just took my charts a little bit to adjust. So what I'm looking for is $70 on this thing, this VPOC. So I did force a target at the end of the day, because as I said, looking at that S&P chart and realizing that we're at a little bit of resistance. Well, actually, we're at resistance on multiple time frames. I'm going to force targets a little bit more, even though I want this thing to get to 70. I'm going to be cognizant of making sure that I take targets on some things. So here's the trading blotter for the day. Again, I always show all the trades. Ring, STC. There's so many calls in this thing. I figured it's worth a shot. Remember, again, my view on call activity. I just use it for an idea. I'm never one of these guys who think, oh, they might know something, that's why they're buying it. I've had more trades when I think that and I hang on to a trade because they might know something, that end up going to zero. 0.0. So there's so many trades that hit the tape in options, and I know most of the option jockeys, what they do is they post 20, they send out 20 on their Twitter feed, all the different trades that hit, and then they retweet the 2 or 3 out of the 20 that worked really well. So I can't make money like that, taking 20 trades and then touting the 2 or 3 that work. So again, my philosophy is when I see option flow on the tape, if it lines up in my system, I'll go ahead and take it. But I'm not going to hold on to something just because we saw option flow in it, because I'm hoping that they might know something. Hope is not a system. What else? I got out of my crowdsource today a little bit early. Again, kind of forced that one at the end of the day. Crowdsource, I think if we go to this, CrowdStrike, I always call it the wrong name. 62.73 is where I think this can ultimately get to, but it has to get through that top of value. So I just didn't see the great risk reward in trying to get a couple more bucks, and just decided to take this thing off at the end of the day. All right, guys, so that's it for today's recap. Again, another big move day. It is a tremendous market right now. Volatility is still around a 43, which I think. Remember, again, with the VIX, people always think that the VIX should go down when the market goes up. What the VIX measures is short-term volatility. So if the market moves fast to the upside, then volatility stays present, right? It's not measuring downside risk. It's not measuring downside volatility. It's just measuring volatility. So the markets are pretty volatile when they do move up too. But regardless, I think that this thing should be breaking 40 at this point. Maybe if we get a couple more choppy days, we might see this thing break 40. That would tell you that the volatility is starting to come out of the short-term options. Again, that's what the VIX measures, is short-term, the price of short-term options. All right, guys, and obviously the volatility. So we'll leave it there. One other thing I wanted to mention: credit spreads, something that I've talked about over the last few weeks. That is starting to tighten, right? Which means risk off. It is not hugely tightened, but it's moving in the right direction. All right, guys, we'll leave it there for the day. Have a great night, everybody, and see you tomorrow in the trading room.